Oh,
My
it's
brother,
work, bro. That's
my
dope.
my my brother came to the stage. I love it. I love it. I love it. I love it. That's what the hell I'm talking about.
Sorry, man. I
Let's
got the loan right here. I was asking, trying to see how that if the question made sense.
nah, bro. Look, first of all, first and foremost, welcome to the show. I appreciate
Appreciate you.
you. I appreciate you coming on the show. Let me stop sharing the screen so that way we can get this right right now. Let me do it like this. Yeah, this is better. So, all right. So let's run the numbers. I want you to tell me the math. I'm gonna start from the beginning. So that way we can run this accurately, right?
Okay.
So, what was your purchase price?
450. But
400.
you said the loan was
Uh-huh.
for like three. It's down to 376 now.
What was your original? How much did you put down when you purchased the house when
Uh,
you closed?
70. So I think it got down to like 390.
70,000. So that's
Yep.
like 50. So that's like
15%,
390.
I think. 15. Yep.
So you did 15% of
Yep.
450.
Yeah.
So let's see, 450 times 15%. So that's 67.5. So
Yeah, we did about
67.5, take away 450. So we're looking at 382
hmm
500. 382 500. And what's your interest rate?
Uh, interest rate 7% actually, 7 flat.
7%. Okay, so let me see, 450. Hold on, let me just put these numbers in. Hold on. So 450, property value of 450. Your current principal and interest payment, I think you said in the chat was what, 35,
35.54.
and that's principal and interest only.
Yep, that's it. Principal and
Okay,
interest only.
principal and interest only. Let's just see. Let me just go through my assumptions real quick. 450. Okay. Property value, and you currently owe how much you owe right now?
376.
So 37600. Okay. Do you remember what was your first date when you made your first payment?
April, it would have been April 1st or so. I got it in
Uh,
March 30th. So it would have been maybe
March. So you closed in March, so it probably would have been May.
May. Yep.
So May of 2025 is when you had your first payment. So we're gonna put May 1st, 2025. Original loan amount 382 500. Your interest rate is a 7%, and you have a 30-year mortgage, correct?
Yep.
So but you've been making extra payments. It looks like you just started making these extra payments because you say you owe 376 right now, right?
Yep. So I just started trying to set up the extra 700 because that's what ChatGPT said should halfway pay it off almost in 10 years. Like I said, which ended up, I think the total over 30 years would have been like 900,000. And I
Hmm.
think it says it ended up saving me that much, like 400 something thousand.
So 376,000 is your current balance. Okay, you have a fixed rate. Okay, let's do some math. I'm not gonna put any because I want to just compare apples to apples, right?
Mhm.
Principal interest to principal interest, interest savings, the whole 9 yards. I don't want to do any escrow and none of that stuff right now. Let's see. So, okay, so you have that. So your loan amount, so 376, and you have a 7% interest rate. Now, okay, let me put that in here. All right, let me go straight to my analysis. And ChatGPT said if you paid $700 bi-weekly,
Yeah, so 1,400 a month, almost half your payment.
so if you paid 1,400 to principal balance only,
Only, yep.
okay. So let's see what that looks like, right?
Yeah, that was my biggest question. Is it worth doing that, or is it worth trying to put into, Meta or Tesla or something else, Nvidia, over that much term?
So let's look at it right now, right? Based off of your the current assumptions, based off the current, well, I'm getting a number that your principal and interest is 2,500, but you saying your principal and interest is 35.
Oh, it says principal, interest, and then escrow. So total payments 3,500.
Oh, no, no, no. So separate out the
Okay,
escrow.
if you take off escrow, would be 1,000 cheaper, I guess.
Yeah, so you had 2,500 principal and interest. Okay, so my
Okay.
numbers is right. Okay, so let me do this. I'm gonna share my screen with everybody right now, so that way we can just really do this the right way. Let me just do this. Let me take this away. So you got a 376 balance, $2,500. It looks like you just made that $700 payment, just one payment so far, right?
I've done it for 2 months. I've done the
So, so you
700.
so you did
Then
so
I
you did
just set it up again because I had to do it myself.
okay. So you did 3,000 so far towards your
Yeah.
principal balance.
Yeah, let me see. Previous escrow principal balance so far. I put down year to date 6,000.
6,000 on your principal. Okay.
Yep. And then so
Yep.
total 13,000 in interest,
Okay.
7,000 in escrow, total 26,000.
Okay. So all right. Okay. So you know what I'm gonna do? So let's do. So you're doing 3,000 a month. Okay. Let me break this down. So if you did, so this is your current, right? And you're doing a principal reduction at $700. So let's just do, you say you did 3,000 so far. So let's just make it an even $1,500. Let's do $700. So let's just do $1,500 a month that you're doing currently on your
Mhm.
current mortgage, right? And let's now look at that. Instead of you putting that $1,500 a month into your principal balance, if you were to put that $1,500 a month into an investment account, making a 10% return, right? And from what ChatGPT was telling you, you would, if you did this for 10 years, your mortgage would be paid off.
Mhm.
Okay. Let's mark this. So let's make this a 10-year. Uh, duh, 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 duh. Okay, so let's compare current mortgage to the 30-year mortgage. Let's do that. Okay. All right. So I'm doing this on the fly, y'all, so forgive me. Da, 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 da.
Or would another way to look at it, say in my total balance, my interest rate, I pay
Mhm.
$2,000 a month. Would I have to make more trading stocks guaranteed than 2,000 a month in a way?
Yeah, I mean, if you trading, you definitely gonna make more money if you're trading, right?
Mm,
What I'm speaking about is just pure long-term investments,
mhm,
right? Um, Trying to take some of the risk out of it.
mhm.
But at your current, I'm gonna share my screen so you guys can see what I'm looking at real quick. Share screen. Okay. All right. Can you see my screen, bro?
Yep.
All right. So I'm looking at. Let me go to the more info here. So your current mortgage, you start off 450. You got a principal and interest payment. If you're putting down a reinvestment of $1,500 a monthly, basically you're paying off that mortgage in 11 years,
Okay.
right? 11.25 years, right?
Mhm.
Now, obviously, I'm doing as a monthly. ChatGPT is telling you biweekly, so there will be some months of the year that you have 3 payments in a month.
So it could be
So
close.
it could be closer to 10 years if you accumulate that. So I mean, look, in 10 years, you're paying this off, you're going to beat the interest trap by a lot, right?
Mhm,
But in that same time, and again, I'm only doing this 1500 as a uh monthly, not a biweekly. But if you follow the same biweekly pattern,
mhm,
because I think twice in a year you have 5 weeks in the month, twice a year. So that will add more money to this. But if you invested this money into S&P 500, making a minimum 10% annually over that same 10 years, you will have $348,000 liquid.
mhm.
So me personally, like what's your ultimate goals, bro? What's your ultimate goals with with real estate investing? What are your overall goals?
Kind of like leverage it. I have a barber shop and I'm opening my second one, so just keep opening more barber shops and eventually own them. So kind of use my house as leverage against everything and just kind of keep stacking up with it in a way.
Okay. How old are you?
27.
27. 27. What if you did something that's more hybrid, right? Because it sounds like you definitely can afford to pay this money, right?
Mhm,
You want to continue to invest into your business, and you want to continue to scale. Why not do a combination of the two? Why not, instead of paying 3,000, why not pay half towards your principal balance, half towards investing? You're still saving a shitload of interest,
mhm,
right? And as you get tax refunds and things of that nature, you can always make principal payments, lump sum payments as well
mhm,
to your principal balance. But one thing I am afraid of with this, how aggressive you are, especially being the fact that you're sitting at a 7% interest rate and you have a conventional mortgage. Right now, you have PMI. Obviously, if you keep paying down the way it is, the PMI is going to go away. But
mhm,
interest rates hit 5%, 5.5%, you're going to want to refinance,
mhm,
right? And you're going to want to get that lower rate. So if you were to refinance, let's just say in a year from now, when you pay closing costs, that closing cost obviously can get rolled into the mortgage or you can pay out of pocket. It makes more sense to roll it back into the mortgage. But now you're looking at, if you take another 30-year fix, now you're starting all over again, right? And then
mhm,
now a lot of that money that you pay down is going to be soaked up by closing costs.
mhm,
So I will look at, me personally, if I was in your shoes, especially since you just purchased this house, you haven't even been there a year yet. I probably would lean more towards investing, especially the way the stock market has been up and down this year. There's opportunities for you to get in and get some good entry points
mhm,
and make a faster return on that money. I kind of would do that over the next year. And I would look at potentially when it's time to refinance, I would probably just drop my term from a 30-year to a 20 or 15-year mortgage
mhm.
because it's doing the same thing, right?
Okay.
Like, so for example, let's look at the numbers, right? Let me just show you exactly what I'm talking about. So let's say if you're in the same situation, you got a 450 valuation on the home. Let's look at a potential refi. I'm gonna name this potential refi. Okay. So 450 value. You have a what we say, 376 value right now, 376 loan amount right now today.
Mhm,
Let's say You refinance at you at 7%. So let's just say you refinance at 5.5% on a 20-year mortgage, right? 376, 5.5 interest rate. Okay, let me see. These numbers are looking like, because you're paying right now 35 plus your 15. So you're paying about $5,000 a month right now, correct?
Yep.
You're paying about $5,000 a month anyway. So let's do this. Let me adjust this readjustment. Let me take this monies out of here. And I'm gonna take away all the reinvestment strategy for now, just so we can just compare everything as is. Okay, so so let's do current mortgage 20-year. Okay. So let's do this. So now oh shit, I didn't pick it up. Hold on a second. Presentation, current.
Or what would you say about an extra 5 to 6 thousand a month? What would you spread it out in how many baskets? Like if you say maybe take a little bit less over the payment and do half and half, would you do crypto, stocks, and gold over so many things? My biggest thing is I just had so much extra, not cash, but I wanted to level out everything over each basket in a way where nothing was kind of, and I just had too much cash. So I was like, I should put the cash into the house in a way and restart again on cash.
I would diversify it between principal, pay down, crypto, stocks, long terms, options,
Mhm.
short term trades.
Yeah, I've been
So
doing long-term options in a way. I've been trying to learn it.
yeah, so I would diversify. Hold on, I'm just waiting for my damn system to catch up to where I'm at. But I personally would diversify.
Do you have a method when it comes to stock options? I wouldn't know if it's called lucky or what. I've been dabbling with it. I have a bunch of SoFi calls 2027 that are up 2,000, 3,000. They're up crazy, but I'm like, man, same way I've been using ChatGPT to kind of help me and it's saying hold them in a way. So I've been trying to buy 2026 calls, just buying a little bit more. But I have calls that are 2027 that are up crazy, but I just don't know what's like the average percent that you're like, man, that's too good to not take in a way versus let it ride out and hold for the future in a way too.
I think everybody has a different risk tolerance
Mhm,
when it comes to stuff like that. Me personally, once I start seeing, and again, it depends on what my play is and how long my contract is. But
mhm,
once I start seeing a couple a couple hundred in a return,
mhm,
for me, I'm taking my money and I'm running,
mhm,
because as quick as you up, as quick as you can go down in that
mhm,
game. So that's just me personally. Me personally, you have to determine which your risk tolerance is when it comes to that. There's a lot of people out here that's teaching this at a very high level. Then I could probably give you that explanation. You got the Chris Sains, you got
that's
Trap,
what
you
I
got
watch Chris saying daily, and I'm like,
right.
man,
Yeah, you got Market Mondays. I mean, you got so many different outlets that kind of break down exit points,
mhm,
and when you should do it. Me personally, once I get to a certain number, I'm fine. I just want to keep going, and because I'm looking at what's my overall annualized return,
mhm,
right? What's my overall annualized return of me doing a deal? I mean, not doing a deal, of me and my option plays. So that's what I'm looking at. I'm just trying to stay as positive as I possibly can. If that makes sense.
yeah,
Okay.
because it's been going up and down crazy now that the market's been doing such high and low swings. It's up 10,000, down 10,000. I'm like, wow. But I'm like, I'm holding it for long term, so I'm like, I really don't watch it in a way.
Which is always good. I'm more of a long term myself.
But in a way, they're
Uh,
calls, so I'm like, man, how long do you hold a call if it is up? Like you said, these things, yeah, they're up like 2,000%. 800%. A lot of them are up, but I'm like, man, how long do I let them run? And then I'm
Damn,
like, man,
bro.
I hate seeing them go down, thinking like, man, what was I shooting for? Infinity?
I mean, it's a good question. What's your, again, what's your targets, right? Like, what is your goals? The best advice that I've always heard is people saying stick to what your goal is. So if you want to see a 200, 300% return,
Mhm.
stick to it and just keep sticking and moving. That's what I like to follow. But again, you got to determine what your target is, because you keep holding to
Or you hear the Chris saying say SoFi to $40. So I'm like, maybe I hold to 40. But then I see them make millions in a day, hundreds of thousands. So I'm like, my money feels so
but
small. It's been
nah,
away.
so you can't compare, man. These guys got millions. You know what I'm saying? Like, so like, and everybody, if you watching, shout out to all my brothers, right? Shout out to all my brothers and my sisters who's doing it at a very large level, but you can't compare your money to their money. These folks got millions and millions and literally millions of dollars in the market. So you can't really compare. Damn, man, this fucking reinvestment strategy, my system, I don't know what's going on right now, brother. But my system is still buffering. It's not allowing me to bring up the updated analysis was showing what that 20-year refi would look like. But let me see if I could just kind of talk it through to you, right? If you're looking at a 20-year mortgage, your principal and interest payment at 5.5% would be 25. No, that's wrong. See, it's not updated because it's the same as the fucking thing. It's not updated, bro. But the 20-year, I say all this to say, let me do this shit manually, right? See, when technology go wrong, guys, you got to have your trusted calculators and know how to do this stuff manually. Let me just give you some math, right? Because me personally, at 5.5%, the way you're paying down, if you did a 20-year mortgage, 20-year term, 5.5% interest, loan amount 376. I mean, you're looking at a principal and interest payment of 2586. It's basically the same principal and interest payment that you have right now. Let me see something. 30-year term you at a 7% interest rate. Yeah. So you're 7%, bro. This is what I would do if I was you. And I wish I could show you this right now. But your 7% principal and interest is 25, basically 25.50 a month right now. Right? The 20% at 5.5% is at 2,500 a month. So we're talking about entry points, right? Your target on mortgage rates should be to refinance to a 20-year to get at least a minimum of a 5.5% interest rate, because you're paying the exact same payment that you're paying right now, and you will pay off your mortgage in 20 years without making any additional extra principal payments. And if you were to make additional extra principal and payments, let's just say if you did the same thing that you're doing right now. Fuck, I can't get into this investment strategy. I don't know what the hell is going on. But if you did the same principal and interest, I mean that principal payment that you're doing right now, I mean, bro, you'll probably pay this shit off in like 7, 8 years. But again, I would look at not paying so much down today on your mortgage. I will wait for the opportunity to refinance, which that opportunity is going to come up before you hit your year mark. I will put more of my money, if I was in your shoes, into the market, because you're going to make more money doing that right now, right? And when the opportunity comes up to refinance, I would refinance into a 20-year mortgage at the minimum of a 5.5% interest rate.
Got you.
Minimum 5% interest rate is what I would be looking at.
You wouldn't do it multiple times. Say it's at 7. If it gets to 6, do it, and then try to do it again and slowly
No,
do
the
it. If
closing
you're gonna
costs.
pay,
You
you'll
got
pay that much
closing.
more. It doesn't cost. Okay.
You got closing costs on both angles.
Hmm.
So for me, I wouldn't do that just because of the closing cost factor. Because you got to remember, closing costs is typically 5% of your loan amount. So damn, I don't know what the hell is going on, y'all. I wish I can show y'all this shit, but it's not doing what I needed to do right now. But I'm just telling you the numbers manually, right?
Mm.
$2,500, 7%, 5.5%, 20 year. That's the number. I would not go from 7 to 6, pay 20 in closing fees,
Mm.
and then 6 months later, a year later, pay another 20,000 in closing fees to go a half a point or a point lower. I would target that 5.5. And look, we're not too far off from a 5.5 on a 20-year mortgage right now. We're probably right around with good credit, good loan to value. We're probably right around low sixes, between 6 and a quarter right now. So you got a half a point away. And once you hit your 6 payment mark, your 6 months or 6 payment mark, then you will be able to refinance. Right. So even if it comes up May is around the corner. You're coming up in 1 year. So between now and May, there will be an opportunity for you to refinance and go into this 5.5, 20 year. You're going to shave 9 years of interest just like that.
Mm.
Right. Just like that with doing a refinance, even if you're paying 15, 20,000 and closing costs, is still going to be a lot less than what you were planning on paying. Because if you paid $3,000 a month, I mean, $700 a month bi-weekly from what Chat GBT was saying, that means that's 26 payments, right? So you're basically paying the same thing, but now you letting the equity pay for the closing costs. It's financed into the mortgage. You keep your $20,000, put that right into the market, and now you cut your years tenfold just by doing a refinance in a 20 year.
Mm.
That
Do you
makes
see
sense,
the
bro?
50? Yes, sir. I'm writing this all down too. Do you
Hmm.
see the 50-year thing happening? And does that affect everything else if it does go through the 50-year
Uh,
mortgage?
if it does happen, I don't think it's for someone like you because you're not going to save money,
Mm.
right? I've been doing since Saturday. I've been doing analysis on this, and the 50-year mortgage, if that comes into fruition, it's only going to save you about $100 to $300, just depending on the person, their loan amount, everything like that. But I was doing examples earlier today. If you go to my live
Mm.
replay, you can see it. I did one yesterday. I mean today, and I did one on Saturday. You're not saving money. To me, it doesn't make sense to tack 20 years of interest on your loan, spread it out just to save $200 a month.
Do you think housing goes up in a way? The housing costs or housing prices? Does it make housing?
I think it will have an impact on housing, because most people they're gonna get sold to think that this is like something that's great for them,
Hmm.
and it will help more people qualify. Like, look, if you saving 250, and if the rate market does go down, hey, that might make it more affordable for somebody to get in and buy a house, right? No matter if it's the right thing to do or not, in my opinion, but it might make it right for them. So, yes, I do think it would add more buyers to the market. I think it could have an impact on home prices in a positive way. But I think every case is different and everybody should treat it as such. Everybody's situation is different. And I think from what you're doing, bro, and how you're aggressively already started paying this loan down, a 50
Hmm.
year is definitely not for you. You want to pay off. And where you are right now, you're already comfortably paying $5,000 a month when you have a $3,500 guarantee commitment, right?
Hmm.
You go to a 20 year, you save 10 years off just like that. And then now you can still pay aggressively. So now you can probably pay that 20-year mortgage off in probably 7, 8 years. Or you can say, you know what? I'll let this ride because again, you still in your 20s, you said, right?
Yep.
Bro, you can let this thing ride, pay down modestly, not aggressive, and invest aggressively into the market. So that way you build up more capital and cash flow. And then now that gives you an opportunity to go out here and reinvest into your business as well. Because if you're making money in your portfolio, now you can borrow against that
Mm,
margin borrow, and then now take that money to invest into the businesses and create more cash flow and pay back those loans with the business income that you're making from them.
mm,
So, based off of the goals that you had when you first came on here, and you said, I don't think paying off aggressively is probably the right. That's not what I would do. Me personally, I would not put that money. I would just get a shorter term, pay it down that way, make principal payments. I'll make one payment extra a year. If you make an extra $3,000 towards your principal balance every single year, you still probably pay this off in 12 years, bro.
mm.
Right? 12, 13 years, give or take a couple dollars. I wish my goddamn system was working so I could show you this, but you'll probably pay it off in 12, 13 years and call it a day,
Mm.
right? Versus you sitting here and trying to, you know, break the bank to go do this when you can just sit here and go do something else.
Mhm.
So that's my thoughts. What's your thoughts?
No, agreed. I was just wondering what you thought when it comes to, like I said, I have a lot of extra cash flow, and I'm like, man, I got the house. I put a lot in the stocks. I put a lot in the gold. I put a lot in the crypto, and they've all almost worked out. Where I'm like, what should I do again when I got enough cash? Should I pay off the house? I'm like, that's the only thing I really owe debt to. So I'm like, I should just kind of pay it off as quick as I could in a way, and just be debt free in a way. And when I said it, when I thought I'd see almost I owe 2,000 a month in interest, I'm like, there's no way unless I'm very good at stocks, I can make more than that every single month guaranteed than just paying off my house and not owe any interest anymore. So that's
Well,
one
you
thing I'm thinking too.
Well, you can. I mean, look, you can make
Mhm,
more than $2,000 in the market just depending on how much money you have in the market,
mhm,
right? And again, you reference, several guys and you seeing how much money they're making is because they have a lot of money invested into this, right? So if you
mhm,
have all this extra capital and cash flow and you want to do two things, you want to continue to invest and you want to build businesses, then I would focus on putting a lot of my money there. I'm not saying not to pay down your mortgage. If that's your goal to be debt free with your mortgage, by all means, do it. Do it smarter though,
mhm.
right? When it's because you're gonna refinance. There's
Yeah.
no way you're at a 7%. People you start seeing online, you start seeing on my channel, hey guys, rates are in the fives, rates in the fives. You're gonna be like, yo, MG, how can I refinance? Right. So to
Mhm,
me, you just doing that money right now, being aggressive with it, doesn't make sense when you know that refinance opportunity is going to come, whether it's 12 months, 18 months, it's coming,
mhm,
right? You get that refinance, 5.5 or lower, 20-year mortgage, boom, solves a lot of your problems right there. And then you just make one extra principal payment every single month. Your principal and interest payment on the 20 years, the same that you're paying right now. So you have no payment shock at all
mhm,
and you still cut in 10 years. So if you make an extra $3,000 a year on your principal balance, you're still going to pay. If you go to a 20-year, you're paying it off 12, 13 years, somewhere around there. And then now all that extra money, you can put that right into the market, build up your investment portfolio. And and
You're thinking, go
now
ahead.
go ahead.
You're thinking S&P 500, top seven mag. Like I bought a lot of individual stocks. I bought a lot of, I've kind of got lucky with a lot of things. I just bought them years ago and they've made a good money. Do you think one stock or the top seven or S&P 500 itself or diversify and just get gold, crypto and that?
I'm
If it
saying
was 10,000
diversify.
extra a month, what would you're saying maybe do a little less on the house for now and then break this 10,000 down maybe. Would you do
Break it
three,
down.
three, three in a way, or would you do one more, a little less, and then,
Break it out. Me personally, I would diversify it,
mhm,
right? That way you're not putting all your eggs into one basket.
Mm-hmm.
right? I would, if I'm talking strictly investing into the market, I would break it down into a third if it's $10,000 a month, and I'll break it into the crypto segment. I'll take into my long term, and then I'll break it into my short term.
Mm-hmm.
What exactly you're going to invest in, I'm gonna leave that up to you because I'm not going to sit here and give you stock advice,
Mm-hmm.
right? Because that's not my expertise. That's not what I do, right? But it sounds like you're well researched and you know all the platforms. You're watching the guys every single day, so they give you entry points and they're giving you, tickers and everything like that. I would say just continue to study, do your own due diligence, no matter what anybody's saying. Do your
Mm-hmm.
own research, and you'll get nice with it. And over time, that will continue to grow and grow and grow. And if you diversified it properly, ups and downs are not going to really impact you in a
Mm-hmm.
huge way.
Okay.
But that's what I would do. And I would sit on here and watch me every day because it's gonna come a time when I'm gonna be screaming at the top of my lungs. Everybody need to refinance. It's the point, the mark is here. That entry point is here, it's available. And I think your entry point for a refinance is 5.5%. That's the number that I will be looking for. 5.5%. If it's 5.625, just depending on the market, I probably would take that too. But that gives you the same payment that you're currently paying right now,
Mm-hmm.
cuts 9 years off your mortgage, just like that. You pay one extra principal payment a year, which is another $2,500 to $3,000 a year. You make that one principal payment a year. And then when you get stock returns, I mean, not stock returns, if you get refunds or anything like that from the IRS, now you can make the decision. Okay, do I want to dump more of my principal balance to kind of, move that repayment along faster? But I don't think you have to go crazy to where you want to pay it off in 2 to 3 years, because that's a lot of money that you can spend
Mm-hmm.
in the market to make more money.
Gotcha.
Me personally. Chat, are y'all following what I'm going? What's your opinion? What's your thoughts to this young brother, man? First of all, I'm proud of you. I know chat is proud of you. You crushing it, bro. Where's your property at?
What's my in Nebraska?
In Nebraska, man. Congratulations, brother.
Appreciate you. Appreciate you.
Congratulations, man. You out here killing it, man. I appreciate you coming on the show and being transparent and sharing your journey and sharing your story with us today, man.
Thank you, man. It takes people like you to learn from. Like I said, I'm a barber, and I just need people who are been in the game to educate me daily, and it's people like you to help me out.
Man, I appreciate that, man. I appreciate that. You got any more questions while I got you on here?
One last question, actually.
Mhm.
Maybe two books off the top of your head that you might recommend that I could, me in the chat or anyone similar minded, young, hungry in the game that, like I said, man, I want to retire young, but I
What
just
we
want to learn
talking,
as
real
much as I
estate?
can.
If we talking real estate, there's only 2 books I'm gonna recommend. My books.
Yes, sir. Yes, sir.
If we're talking real estate, there's only 2 books I'm gonna recommend. Dude, I'll send you my books. DM me on Instagram, MG the Mortgage Guy.
Gotcha.
What's your IG page?
402 Fades. It's our barbershop page. I only operate on
402
one thing.
Fades.
Yep, 402 and then FADES Fades Barbershop.
Fades Barbershop. All right. DM me. I'll look for it. Send me your mailing address and everything, and that full name, mailing address, and I'll send you my 2 books. But I'll tell you what I'm dealing with right now. Right. If we're not talking my books, I don't make no money for this. The Science of Scaling,
This
Benjamin
time.
Hardy. This is what I'm rocking with right now. The Science of Scaling.
Gotcha.
There you have it.
Yes,
My
sir.
brother, hit me up. Shoot me a DM. I'll send you both of my books. And you'll get those probably, if not later this week, early next week.
Appreciate you, man. This is a blessing.
Nah,
Thank
you've
you.
been a blessing
Thank
to us,
you.
brother. I appreciate you coming on tonight.
Thank you. Have a good one.
All right, you too.
Catch you.
Shout out to Travion. Shout out to Travion, man. This was good, man. This was good, man. What y'all thought about that?